Good evening. This is ENCA Moneyline, your money guide. My name is Sikim Gabadeli. Coming up on the show tonight, South Africa's industries pull their weight as more money is made in the third quarter of 2014 to boost the economy. Postnet is sold to Aramex for 190 million rand, with expansion further into Africa still the focus for the Dubai company. And we take a look at the best and worst stocks of the year when investing on the JSE. All of this and more coming up in the next half hour, but first, your top stories. South Africa continues to cement its economic building blocks. The country's industries have brought in almost 2 trillion rand in the third quarter. According to Stats SA, South Africa's industries generated 4.2% more between July and September. Turnover in 6 of the 8 industries rose, with the largest uptick recorded in electricity, gas and water supply. The data doesn't include agriculture, financial intermediation, insurance and government institutions. Mining is still not faring well as the sector recorded a decrease in turnover in the third quarter. Total revenue for all industries surveyed reached 1.96 trillion rand. More South African businesses have succumbed to unpaid debt this year compared to a year ago. According to Statistics South Africa, the number of liquidations went up by 33% this year. The data not only measures economic performance, but also shows the levels of unpaid debt in the country. Meanwhile, insolvencies went up by 6.1% year on year in October. Woolworths is expanding further into the continent. The retail giant is opening its second store in Ghana's capital, Accra. It currently has 63 stores in 11 African countries outside of South Africa. These include Botswana, Namibia, Kenya, Tanzania, Uganda and Mauritius. The retailer says it will continue to invest in new stores as well as extensions on the continent. Recently, some Woolworths shareholders supported a call for shoppers to boycott it. Boycott, Divestment and Sanctions SA is against its trade relations with Israel following the war in Gaza. South African retailer Postnet has been sold for 190 million rand. It's been bought by Dubai's logistics services company Aramex. Postnet provides courier, printing and mailing services, among others. It has 287 stores in South Africa, which will be owned still and operated by its franchisees. One Logics Group has sold the courier to Aramex, which is expanding its African presence. This is Aramex's second major acquisition of a South African company. It bought logistics and transportation company Burco Express in 2011. Local financial services group MMI Holdings Limited is digging into its war chest again. This time, the company is buying a local stock brokerage house from Botswana's Imara Holdings. The acquisition of Imara SP Reed is a cash purchase of 120 million rand. MMI Holdings is hoping the new investment will help it gain exposure to wealthier investors, a growing market in Africa. South Africa's third largest insurer is currently valued at 31.1 billion rand. The deal is still subject to regulatory and shareholder approval. The oil industry has been a hot topic of discussion for the past month as oil prices continue to plummet. Top officials of the Organization of Petroleum Producing Countries says the rise in supply in the global market does not justify the sharp drop we've seen in prices.
Plummeting oil prices have been big news for the past month, and the effects are already being felt. The Egyptian stock market plunged $3 billion over the weekend as low oil prices dragged down regional economies. Increased competition in the industry is said to be the catalyst of the oil price drop. But top officials in the Organization of Oil Producing Countries speculate there is more to it than that.
We are trying to figure out what the main reasons are that led to this dramatic decline in oil prices. When you consider the supply, demand and inventory, you find that there is an increase in production, but it's simple and does not lead to this huge decline, which has already reached around 50%.
Experts say OPEC members with new projects will be affected.
These low prices could lead to a lack in investment in new oil projects, both from the member states or even countries outside OPEC. After a while, they will lead to reduced supply in the market, which may lead to a high increase in prices.
If that happens, consumers will bear the brunt. OPEC members may have to consider cutting output.
They should really cut it. This is very important because there is a waste. I'm sure that there's more than 40% waste. They should cut it.
OPEC says it will have a better picture of what's happening in the markets mid-2015 and will be able to take the required decisions then.
Well, it's been a volatile year on global markets, and ours certainly didn't escape that. And if you're invested in the equity market, you've been along for the ride as well. So we're about to tell you where you should have put your money and which areas of the market were best left alone. For the best and worst performers on the JSE, we're joined now by Viv Govender from Vunani Private Clients. Viv, thanks so much for your time today. Let's start with the good news. And what I found quite surprising, and I think probably for a lot of market players, was that Telkom did so well. I mean, it's gone through so much, results down due to retrenchments, and it's been making the news for all the wrong reasons.
Yeah, but you got to understand, Telkom, I mean, to be as undervalued as it was at its low, it required an incredible amount of mismanagement by management, quite frankly. We talk about a company here that was valued at, what was it, a few billions, while its major competitors were valued in the hundreds of billions.
Yeah.
That mean Vodacom and MTN, companies that started off well after Telkom. It did not have the advantages of the Telkom with regards to this huge, the valuation put on the fixed line infrastructure in South Africa is in the multiple tens of billions. So you had a company worth a few billions, whose infrastructure, whose assets were worth multiple tens of billions, whose major competitors were worth multiple hundreds of billions.
Yeah.
And the only reason that was possible was because of the massive missteps that the company had made in the past. And what we are seeing now is some kind of switch around in terms of management, and that's recovering. That's what it's caused the stock to recover as it is.
Okay, so people are saying, right, there's a turnaround strategy. We trust that Sipho Maseko and his team can do this, so we're just going to come back in. It's been oversold.
Yeah, I mean, not even to do this very well, just not do it as badly as the people in the past did. If you look at what happened in Nigeria, it was almost a comedy of errors here.
Yes, and they've now finally resolved that in the past week. It looks like food companies, Astral Foods, Pioneer, also doing pretty well this year. I was quite surprised by Astral Foods. We seem to still like our chicken.
Yeah, I think it's also to do with a couple of factors. Of course, we got the increase in tariffs coming through. They got the recent boost off, of course, of the, this is it's a temporary boost with regards to the avian flu it being banned. But I mean, I think the primary thing was the fact that we had cheap Brazilian chicken being banned, or not being banned, but being more highly taxed in course over the year. We also had changes with regards to the weather. I mean, one of the big input costs to them is food for the animals, and the fact that we had a change in weather meant that the food prices had come down, which is also a positive.
How did our banks perform?
Reasonably okay. I mean, if you look at the overall sectors, the financial sector was the number one performing. Of course, financials include industrials, plus they include insurers, life insurers, plus the banks. But the banks did reasonably okay. FirstRand and Capitec was good performers. Capitec, especially when maybe people consider them to be a direct twin to Able, but they have a very different model. A model I think that is actually positive for their consumers, as well as whereas Able's model is probably negative for their consumers. I mean, Capitec gives you low-cost actual banking. Able is giving you high-cost loans that you are basically paying off long-term for short-term expenditure, which is a negative for any consumer.
So which sectors should one have avoided in 2014 with hindsight?
In hindsight, you should have sold your your resource shares after the start of the year. The resource sector has come down dramatically, and that's not driven just by our strike action, which obviously did not help. But if you look internationally, we talk about BHP Billiton, we talk about major international operators as well. Even looking at countries that depend a lot on resources, like some of the Gulf states and places like Nigeria and Australia, these companies and countries have come under pressure because China is changing the way it's functioning. It's got a new normal. The new normal is more about consumer-based growth as opposed to infrastructure and export-based growth. export-based growth, infrastructure growth requires a lot more commodities. If you have a hairdresser, they require hardly anything in terms of steel production. You build a car, you build an iPod, even you're still requiring some steel production.
You still need some steel. Look, I mean, the one area of the market that people had some hope for at the beginning of the year was the construction sector. We've been talking about this massive infrastructure build in South Africa, but it looks like those projects are taking their time again to come through. So how did our construction companies?
Not very well. And I think, and also, I mean, there's also a couple of things. Firstly, we thought that the whole competition issue was, resolved, and then it came back to bite us again.
It's come back,
Actually, some companies actually trying to fight that, saying this meeting that occurred it's becoming called the meeting. It's called the something. It's always an issue. So the meeting is a meeting that apparently occurred between the major construction companies, and they're trying to dispute the fact that whether or not it was covered in the previous agreement or not. Also, I mean, we know that the country is not doing anywhere near as well as we hoped it would do. 1.5%, 1.4% growth rate for 2014. The Treasury is under pressure. The Finance Minister has come out and said we need 2 years to consolidate ourselves. We've seen our ratings fall because of expenditures. The government is just not in the place it needs to be in order to embark on such a multi-$100 billion projects like it was discussing like a year or so ago.
Willing to take any bets for 2015?
I would, actually. I think one of the bigger fallers recently has been Sasol. I think Sasol by the end of next year would be better than it is right now. I'm not saying this is the cheapest price to buy it at, by the way. I think if you wait till a couple of months, you might get a cheaper price. But at the end of next year, I think the whole price war in the oil sector will be over, and Sasol should recover quite strongly on that.
They've taken quite a hit, Thanks so much for your time today. Viv Govender is with Vunani Private Clients. Well, it's crunch time at the country's oldest candle factory, which is putting in the extra hours to meet increased demand. Following the recent power blackout, South African retailers have been stocking up on candles, and orders from supermarkets have skyrocketed in the last 2 months.
Load shedding may have put many in a spin, but it's prompted new demand for old-fashioned lighting. Built over 100 years ago, this factory can now produce up to 1.5 million candles a day.
We've had quite high demand for the past 2 months due to this load shedding.
The factory says chain stores countrywide are responsible for the biggest orders. In some cases, retailers have doubled and even tripled their monthly request.
It's very satisfactory, but nothing that we can't handle. We normally have a five-day working week. We can work over weekends. We have to take care of the current orders that we have.
Last month, Eskom implemented rolling blackouts for the first time since 2008. Since then, millions of candles have been molded, packed and transported. Their destination? Shelves across the country in supermarkets and spaza shops.
The candles are moving very fast. People are just coming in. They actually appoint a man here to tell them where the candle is.
Oh, really?
Yeah. Sometimes we have to because there's no electricity.
Although load shedding is on hold for the rest of the month, city power cuts and maintenance problems have left some areas in the dark, making it likely the increased demand for candles will continue. Erin Bates, Newtown in Johannesburg.
And after the break, we unravel investments into technology on the African continent. You're watching ENCA Moneyline, your money guide. Stay with us.